Another dull day in the market. Man, everybody's hammering on everybody today. It's great. I love it. Everybody takes everything so seriously. Everybody's all wound up, need to get outside, ride a bike or something. All we're going to do is take profits. So we got some interesting ones. Let's go back to that mosaic. So ORC is taking, that's a big financial company. It used to be called, God, what was the name? Oxford or something years ago. It's been in this portfolio a long time. Yeah, who knows what's going on there with all the financial stocks, but I know it makes money. That's about all I know about it. But numbers of occurrences, this is what we're after. We spread that money out and we try to hit as many as we can. A lot of people don't follow this line of thinking because they want to make that one big one and the lottery ticket and tell all their friends about it instead of making money consistently on a day-to-day basis. Kind of like you got to start out small. It's like when you first start out in school, you don't know shit. And over the years, you start to gain knowledge. And when you get into the workforce, you don't start off at $1 million, do you? You might start off at the 20,000 range, move up to 40, up to 60, up to 100. It's the same thing in the market. That's how you do it. So we're just looking at the things that move the most. This isn't going to have a bearing on anything. I don't look at these charts for nothing. All this is a reference. All we know is what we paid for it over here. If this comes up on the scan, we buy into it again. If not, we've already hit, let's see, we've gotten 3 occurrences already on this position. This is our key, right? We don't know where this price is going. There's probably some buying going on here. We don't look at volume. We don't look at nothing. We don't care. It's going to do what it's going to do. We know we're trying to sell this for, this is TLT. We're looking to sell this for, what do we say, 158? It's at 140, so it's got $18 to go. All right, might not sound like a lot, but when you start adding all of these up, right? If each one of these made 18 bucks, which they don't, I'm just using it as a example, but this is where we get our occurrences from. We know we've bought in at the 100% level because we're 100% invested at that level. Max shares, we don't have it on this chart here, but let's take a look. VTR, looks like 2, so it's probably going to be in the 20 range. Size of this account is 68,000. So it's below 100,000. We keep our shares at 10% of max shares. I don't know how I move that. That's weird. Anyways, we target the dividend amount. It's that simple. Keep your trades small and try to target everything as close to the mean as possible. What that means is on Lamar, this is some type of advertising company. I hadn't got a clue what they do. I'm pretty sure they're the guys that do the signs up and down the highways. Old enough to have been around the United States, so I've seen a lot of signs. Just rings a bell. Don't care what this company profit is. It can be lower or higher. It doesn't matter, but look what it's paying, a dividend, right? That's all that matters. If you're looking at their financials, trying to guess, maybe it's going up, maybe it's going down, you get a 50-50. I don't care. We're here to manage money. Nobody, the pros manage money. They don't play these games running around trying to figure out what direction it's going. It's a loser's game. If it's going up, it's going up. If it's going down, it's going down. It can be sitting the same on the weekend, right? But what's happening? I'm collecting dividends. Doesn't matter. It's just the size of your account. And once you get over it, you say, okay, well, all I've got is $20,000. Well, if you're in a hurry to make $1 million, throw it into futures, right? And you'll lose it all. You'll have to start back over and start your thinking all back over. If you don't know what you're doing with these, you're not going to make any money, right? You can make some money in futures, but $20,000 is not enough to play futures. You can play the micros, and it just takes you longer to lose your money. It's leverage. Stay away from leverage until you have been doing this for a while. I don't even like messing with them anymore because everything's so automated. You put an order in there and the pros look at it, or the algorithm looks at it and it goes after it. And it might go in that direction because maybe you have 1,000 people that are all playing the same game. They're all going short. It just keeps moving against you. The algorithm knows they have enough money. They can play. They can go in the negative. It's, do you have more than they do? That's the game. Once you understand that, you stay away from it. You know, if you want to try to pick something off, because, oh, it's an all-time high. You know, what's an all-time high? Is this a high? I have no idea if this is a high. Just because you see it on the chart there, right? Your brain's telling you, and what you've learned is this one's telling you the high is 93.66 on a 6-month chart. Go back in time and look at it. Who cares? What difference does it make? Right? Maybe this is the high where I'm sitting at 94.85. I don't know. Doesn't matter. But what I've done is I've stuck a stick in the sand and said, this is where I'm taking profit. This is what I'm willing to sell these shares for, whatever they are. Which one is this? INGR. I moved it around, so now I got to try to find it. So I get 2 shares at 94.85 for sale. Somebody wants to pay me for that, I'll get that, and I'll put the profit in my pocket, right? Move on to the next one. If not, the next time I'm going to buy this is just one strategy, okay, is at 80.22. The other strategy is you get these 50% pullbacks and a 100% pullback off the chart, and all you do is go off the scan. You buy it when it comes back on the scan. This was probably bought, well, looks like it was this week. You see that little blue triangle? That's signifying a buy. If it's red, it's a sell. So we look at the sells. Which one's sold today? No, that's not one. That's not one. Where are they at? That's not one. BGH. Where's the sells at? DBL. Nope. That's just showing 0. What am I looking at here? Oh, there we go. EGP. Yeah, okay, so there's a sell. We don't know how long this one's been in here because we don't have a blue triangle on here. And this Interactive Brokers really only goes back about maybe a week, week and a half. Maybe it's just 7 days. I think it's 7 days. But anyway, so it's been over 7 days since it's been in the account. Maybe we bought it here. Maybe we bought it back here. I don't know. I have no idea. All I know is we took the profit. And so we're at it. Right? It moved up $3.11. It doesn't mean anything. Now it shows our account, overall account's down and it's moving, right? It's unrealized, $200. Does that make a difference to us? No, because what have we profited today? Let's get this chart over here. Always keep a running total of what you're doing. When you look at these things on a day-to-day basis, your profit and loss, it's going to make a difference in your thinking. You can actually see your accounts growing. We had 4 days in a row of basically flatline. You know, we still made money, but it was just flatline, nothing really moving, very few trades. Now, all of a sudden, you get this huge move up on what news? Earnings, right? Boom, we take profits. Anytime the thing's moving up, we're taking profits. But it's already preset. It's not like we knew that the earnings were going to be positive. We don't care if they are. You had a 50-50 chance. If it goes up, we take profits. The problem what most people have is have unrealistic goals because, let's take a look at this one. 1460 is what we paid for it, or that's our average, right? And 1595 is the exact amount plus $1. $1.26 away from our average cost. What some people try to do is, I want 100% profit, right? And that would be what, 29.20, somewhere around there. What do you think the chances are getting there? What's the probabilities? It's possible it could go there, right? But is it likely to hit there anytime soon? Probably not, right? So targeting something closer, let's use something that would be a little closer as far as percentage or dollar value that would show up. There we go. So this was bought at what most people in their thinking would think, well, I'm not going to buy up here. Why would I buy up here? That's at all-time high. I want to buy down here, right? So they're missing out on all of this. They have no idea what's actually going on in the market. So you're looking at this and you say, okay, what did my scan tell me? It said, well, this one looks good for several different reasons. We have an algorithm that tells us everything. So we say, okay, we're going to buy in. Now, I can't guarantee you that that's going to hit 14.10, but the strategy goes further than just buying and selling, okay? You can buy and sell anything at any time. What your reasoning is what is going to make you successful and how you manage money. These charts are going to do nothing for you, okay? That's just a number. It just so happened that these are the candles that ended up there, and the numbers are the numbers. That's what we play with. So 110.18, got 2 shares. We're like, if it hits up here, we sell. If not, it comes down to our 50%. In this, these are weekly bars. Don't get confused. Everybody keeps, oh man, it's moving too fast. It's a weekly. I know you probably can't see it up here, but these are weekly bars. Look at the timestamps, right? There you go, 4:12, right? And it's 4:15 now. Got my volume off on my desk. I think you guys can hear me. Yeah, I've got the volume on. Anyways, yeah. So, like, I mean, it's impossible for you to know what direction it's going. It doesn't matter what tools you've got. You can sit there and you can look at volume. One day it could be telling you volume's way down and the price is skyrocketing. The next day the volume can be still and it's skyrocketing. I mean, it's just a guessing game at that point. And now you start looking for another thing to correlate with something else. And the whole time they lead you away from the most important thing that you need to be doing with your money is managing it. So one rule of thumb, do not overinvest based on the size of your account. So all these different accounts, every one of these is under 100,000. Okay, so you got 27 in this one. You got 34 in this one. What's this other one? And this other one's got 60, close to 68. My point is, you have to manage your accounts based on your risk, okay? Your risk per position. So if you look at this, if you got $170, let's just see, I can't remember. They vary from stock to stock because we have a lot of different variables that go into our scans. But let's just take that what it's sitting at right now, 67,956. Okay, multiply that by 100. Okay, that's less than 1/4%. Well, it is 1/4% on that particular one. You can go through each one of them, but majority of them are going to be under 1% of your entire account. So if you think about it, if you lose one of these, like let's just say the worst case scenario is it goes out of business, right? So you lose that $170. But what they want you to do is they want you to buy 100 of them. That's the default on all the platforms. And you don't think you can make any money by just buying, in this case, 5. So let's step by step. This one's probably been in the account a while because I hadn't seen, yeah, so it was bought back here somewhere. So it had the opportunity to come down and hit. So we had a buy limit in here at 27 to buy another 5 shares, or in this case, it would have been 6. The max shares can change. Just depends what the scan comes up with. But we have 5 shares in that account, or in this position. Meanwhile, if you look down at the bottom of the screen, you're collecting these dividends every month, right? The stocks that don't pay you dividends, they're called speculative stocks, or they like to use the word growth. And that's fine. Some of them you can make money off of, right? But what do you have to end up doing? You have to buy a lot of them to consider the move, right? I'm sure you could buy one of Tesla, and if it goes up $100, you make $100. But for the small investor, it's not a smart move because let's just say you caught it at the top because you don't know where a top is. But let's just say it caught here and went down, right? Or you buy it here and it goes down. You're thinking it's going to go up because you bought on one of these so-called down bars. You say, well, that was the bottom. Yeah, well, you're looking at it in the past or in the future. You're looking at the past. Okay, it's easy to say I should have bought it there. You need to say, hey, here's a better way to look at it. If it comes back down to this level, like you see here, 29.27, I don't see any red bar there. And it just happens to correlate with the top of this. That was a 50% pullback in a 6-month chart based on your mean or your average price. That's what you base your information off. You don't base it off what the high was. Who cares what that is? You didn't buy it there. Somebody else may have sold it there or bought it there. Who cares? This is what you have in it. Make your decisions based on your position and the size of your cash. We go more in depth. I got a book coming out that'll explain it further. It won't be much. I'm trying to get it out to the masses so people can understand this and stop getting swayed by all these swindlers online that don't have any clue what they're doing. I'm not saying I'm, got the holy grail here, but we don't lose money. And if you're interested in not having to sit in front of your computer for hours on end trying to learn stuff, managing money is the key. These charts mean nothing. There's no automated system. Well, I'm sure there's some automated system out there that makes money for these big corporations, but I'll bet you it works by small penny increases and millions of shares or thousands of shares, whatever you like. So our focus is on when do we buy again? Well, right now we already told you this particular strategy that I'm showing everybody live. This is a pullback on a 50%. If you want to know more about it, I'll include it in the ebook, or you can just watch me trade it. It's not a big deal, but I'm not going to be on here for hours on end showing people. Okay, we just sold something else. It's another thing. End of the day, start of the day. Looks like we sold SO, Southern something, $7.81. So that just bumps us up to 1282.38 on the day. Okay, and you don't have days like this all the time. You don't get excited and blah blah blah. Just it should become kind of ho hum. It should be really boring. You should be oh hey, I've got $50,000 and I made $50 today. Whatever, right? But if you keep this same train of thought for years, what'll end up happening is that now you're looking at an account that's $500,000 and it's $500 in a day. It seems impossible because you've never seen it done before. Now, what one was that? SO? Got to find that because I go back in and fix the chart because I don't want to make a mistake when I see it again. There it is. So SO. Okay, so you can see that our average cost was right here at the 61.65, went up and hit. Right? Did I know what was going there? I have no idea. I'm just following rules. Following rules and managing the money based on the size of the portfolio. That's it. Okay. Oop, get that off of there. So we're going to copy that and send this over to Twitter, since we have some people following us over there. People like to see like, oh, hey, I got that too. Oh. Damn, I got the damn caps on. I don't know what the percentage gain was on that. That was a 4% gain. Not bad for I don't know how many weeks. But, it all adds up. Think of it as going down to Walmart and buying a can of beans. How much money do you think they're making off a can of beans? They ain't making $1, right? Because they had to pay something for it. Maybe they're making 10 cents. But they sure sell a hell of a lot of cans of beans. So what's their risk? The risk is nobody buys the beans. That's our risk. Nobody buys our position. I'm just looking at other ones that are on the move here before the end of the day. I'd never change my mind, okay? Fear of missing out or fear that it's not going to hit that. I don't care if it hits this or not. It's just another occurrence. If it hits it, hey, great. I'm not complaining. If it doesn't and it comes back down, the only time I'm going to buy it from this point forward with this particular strategy is down here at 134.97. Once you get some more experience with it, you'll understand what's actually going on here. And from week to week, this isn't something that you see immediate response. Well, after you're in this for about, I'd say 45 to 90 days, once you have a decent sized portfolio and you start seeing the dividends start to roll in, you'll start to understand what's happening. And then the light bulb will finally go off. It takes a while to get over the brainwashing if you've been doing this any amount of time. What is going on here? Yeah, at the end of the day, we've had a pretty good size move up. We only got 10 minutes left in the market. There shouldn't be too much more going on. I bet you see a little bit of push on some of these. We got a few. This one came within a penny. This is another CEF. I highly advise people, if you're new to this, really look at CES because they have a higher dividend yield. And if you have a small account, it's going to help you grow your account faster because of the dividend yield. You won't get the same amount of occurrences, but the amount of money will start coming in faster because all accounts that I start people on, I focus on getting them, no matter how small the account, I focus them on the CES because if you can make 10% plus on your money, you'll grow it quicker and you'll actually be able to see money coming into your account, into your cash account. Okay, and that's money that you can trade. Now, this isn't something where you have to have 24-hour surveillance on. You know, you don't have to be reading some, institutional magazine or reading the prospectus on what you're buying or whatever else. You have to buy into the idea. Okay, think about it. Do some research that if a company is paying dividends and maybe the dividends are going down, maybe they're staying the same, and maybe they're going up, you have to make that decision. Or is this company making money? If it's making money, it has the ability to pay you dividends. If you like risk, this is not going to be for you. If you like taking a lot of risk and you think you're going to make a bunch of money in the market, then, good luck. This is not for you. This is not a risky endeavor, but what I've incorporated is the ability to trade it instead of just buying stuff and sitting on it and collecting dividends. Giving some people different ideas. Think outside the box. Understand that you don't have to lose money in the market. The whole thing is, make sure you protect your capital. And say, well, I'm protecting my capital. See this? There's 18,831. I'm, protecting this person's capital here. They get 12,074. Why? Because I'm following the plan. I'm following the rules. Okay? I never put too much money into one position. If you're all in cash right now at the top, if this is the top, if you believe this is the top and you're fully in cash and you keep reinvesting those dividends, you might want to take a second look at what you're doing. So yeah, had a lot of positive moves today. I'd like to see a few more of these ones that are just kind of floating around in the positive territory close out, but you're at the mercy of the market, and that's fine. I'll stick to the plan. If it cashes out, it cashes out. If we're still making, your goal should be 1% of your account all right, or 1% of whatever amount of money you have invested, or just in your account. It doesn't even have to be invested. 1% of your account. That should be the minimum that you're trying to pull out of the market each month. That's 12% per year. People don't think that's possible, but I've done it for years. And once you get used to it, you can go to sleep at night, not have to worry about it. Then you can go and, I got kind of lucky with Bitcoin because I said, well, I mean, I'll put, what was it, $1,800 in when it was $600. So I ended up with a couple Bitcoin, and now I'm sitting pretty. I buy and sell it now, but it's just the same philosophy. But that's something that I just play with. That's not something I'm, depending my retirement on. I would not. If you're going to do anything with Bitcoin, you do it fractionally. That's what I do now. I don't trade, but not even 1/4% of what Bitcoin is actually worth. It has to move a lot for me to make a couple $100 on it. But keeping the round numbers, 10%. It's always a good place to start. If you can hit 10% in a year, because we'll eventually have a backup in this market, right? And if we look at our profits, we can look at this and say, okay, at the end of the month, we got 15 days left. Let's see what we did last month. 1637. That's down here, and you're at the mercy of the market. So we're $900 away, and we still have, I don't know how many trading days left. Probably 1, 2. Let's see. Tomorrow's Friday, 2, 10. So probably 11 trading days left. So to make that, we need to make about $100 a day, right? So dividends, here's your cumulative dividend column, and you can see we just passed the dividends as far as cumulative totals. In the middle of the month, dividends aren't paid as heavy. It's usually at the start of the month, end of the month. Might have a big payoff tomorrow on Friday, maybe not, I don't know. I don't pay that much attention to it. I'm more focused on making the trades correctly and making sure that nothing's happened. We did have one thing you need to pay attention to too. If you're new to this, you'll have what's called GTC orders on all of this stuff. You'll see them in this column. Okay, and you keep everything GTC. Doesn't matter what you do, good till canceled. Some platforms you can go like E-Trade, you can go good till date. You can put that date in. I get more into that in the book. If you're having trouble with your trades and you're trying to figure out how to keep up with the rules, there's certain things you can do that makes it more automatic. But there is a learning curve to it. It's very straightforward and simple. But whatever you do, think managing your money first before you think, oh, hey, I need to make $1 million by the end of the week. That's a fool's game. That's like just saying, hey, I'm just going to go down here and buy a lottery ticket. Your chances of doing that are 750 million to 1. It's going to hold true no matter whatever you do. Occurrences is where it's at. If you're constantly taking money out of this market, you're growing. Okay, so here we go. Let's go back over here. So we're constantly pulling money out. You don't see any negatives. You see zero. That's where we weren't paid anything in dividends. Nothing came in out of our accruals, or there was no ex-dividends that actually paid on this particular date, because you'll have pay dates and record dates and ex-dividend dates. It's kind of confusing. I know I don't go into it, but every once in a while I'll stumble across it and help people out with it. But yeah, what else have we got going here? Only got a couple minutes left. Maybe we'll get something else closed out real quick. Kind of doubt it. You notice you never see me close anything out early. There's no reason for me to. Now, if somebody was to give me a call and say, hey, you need to close all your positions because the market's crashing, I said, what proof do you have? I'd really have to have some pretty darn good proof. Because I like pulling those dividends in. You think about it, when you scale it, Okay, right now this account is making 8% if I do nothing, right? This particular account, this portfolio, 32,176. That's a static number until you do some trades. Multiply that by 7.91. This is a fluctuating percent, right? As prices go up and down. This account by itself, if I do nothing, is going to bring in $2,545.12. Okay? That's a fact. You know that. So if the market crashes right now, we know that I'm going to make $2,500. So what happens? My account grows. And you might think, well, that's nothing. I was like, okay, so where are you making 1% on your money? You can't even make that in the bank. Okay? We're talking if the market's crashing. So if I can make just $2,500 on this one account, if I added them all up, let's just say they're all the same value, multiply that by 3, right? So that's going to be $7,600 for all 3 of these combined accounts. So what have we got so far this month? $755. That's about 10%, right? And how many months have we got? We're 4 months in. We're averaging 16. What's 1637? If you're good at math, you'll get good at it if you follow me. Because I'm fast on numbers. I know what it takes to make money. Nothing special here. No tricks, no games. But maybe these close out. I don't know. Let me get rid of this stupid line up here. It's confusing. That's just part of these tools that puts these lines up on here. These lines are nothing special. We're just using a tool. We're actually using a Fibonacci tool to put these up here. It's just easier than going, what's 50%? You know? Use the tool that they have there. I just use them differently. I don't use them as speculation. And oh, market's already closed. I didn't even see that. Didn't hear the bell, nothing. Must have had the volume off on something. But yep, I know weird. See, this one actually has a high of 42, so it hit 42, but there just wasn't enough. I was probably too far down the list. So as soon as you put your order in, you're in a list with could be 100 other people, could be 1,000 other people trying to sell at $42. So you know there's some other orders there, right? Because you didn't get filled. You know, I mean, it's just common sense. It hit 42, and you didn't get filled. So there was other orders ahead of you. Maybe it gets filled, maybe it doesn't. I don't know. You know, it's been up to 42. It might go there again. Who knows? But I don't guess. I'll never tell you which way it's going because I have no idea. And there's no indicator that tells me what direction the market's going. So don't look for it. I'm just trying to save you some time. I've been doing this for close to 30 years. And these smaller accounts are set up especially to help those that are just starting out. I manage up to 15 different accounts and different platforms. You can go to any one you want. TD Ameritrade. They're all free. Now this one you're looking at here, I actually pay $1 per side. I like interactive brokers. I've never had an issue with them, so I stick with them. $1 per side is not going to make or break me, but I still get my profit because I make it above and below. I'm not taking it away from my profit. The market's paying them, not me. That's the way I look at it. So, well, hopefully you gained something from that. If you can't, just go back and look at it again. If you have any questions, just email me at T1ReconRider, or you can get me on Twitter at DCT, Dividend Collection Team. But that's it. I got to go walk the dogs and mess around with a lawnmower. Anyways, later on.